Hello, everyone. As discussed in our live sessions, we are going to have some discussions through the recorded lectures. So we will be taking up first the essay 550, which is the related parties. As I told you, it is extremely important for the examination, and we can definitely expect a question from the standard in your exam. All right. So I would request every student to have the textbook with you, along with you. We'll be doing it in line with the textbook so that the understandability is 100% clear. All right. So we have essay 550 related parties. First, we'll get the backdrop of this. And like always, I'll give you the entire summarized way of understanding this. And once you get the flow of it, the standard is quite simple to understand. All right. Now, essay 550 related parties. Many students have a misconception that related parties by itself is something wrong which the organizations do. Let us take the example of a company. Now the company will be having subsidiaries, associates, joint ventures. Okay, so these are all, or maybe they'll be having directors. Okay, they have the KMPs, relatives of the directors, etc. These by very nature are considered to be related parties. Now tell me, why will the company actually enter into such kind of relationships with any other entity? Why will a company be interested to acquire another company's stake or to make it a subsidiary or a holding associate company? Reason is quite simple. Obviously, they want to take some kind of advantage because of the control that they're going to have. Correct? So we cannot say related parties is something wrong. No. Related parties are very normal things that happen in the business. Very normally, the business people trade with those related parties. The only requirement given is that it is very important for the management who will be responsible for the preparation of the financial statements to do two things. One is that you have to disclose all the related party relationships. And if suppose with these related party relations, you have entered into transactions during the current period, then those transactions have to be accounted also correctly. All right. So two important things. One is you have to disclose all the related party relationships. Now, for example, if you take a company, then wherever we have control, that means subsidiary, joint ventures, associates, or maybe if somebody else is controlling us, that means our holding companies, these by very nature are related parties. So whether you have transaction with them or you do not have transaction with them, are they your related parties? Yes. So it is important that you have to give a disclosure of the same with respect to the applicable financial reporting framework, because we have accounting standard 18, which is going to talk about related parties. Correct? The standard very clearly tells that, look, whenever there is a related party transaction happening, it has to be properly disclosed and accounted for in the books of accounts. Clear? So what the standard is telling is, SA 550 obviously is auditing standard. It is a responsibility given to the auditor. So this standard tells the auditor, look, auditor, what management is doing with respect to related parties, you have to ensure that they have adequately disclosed all the related party transactions and all the related party relationships. So how many related party relationships are there? All have to be disclosed in the financial statements. And so if suppose with those transactions or with those relations, you have entered into transaction during the current period, then definitely the accounting also has to happen correctly. Okay. Now, there is a possibility that there is a company, we are manufacturers, okay, as a parent company. And our subsidiary is the subsidiary which is producing the raw material required for a manufacturing. Obviously, the very reason for us to, have a major stake in that company is that we are going to take advantage of it. That means suppose tomorrow if there is a shortage of supply of the raw material, because we are holding, supply will be made first to us. Correct? So obviously when we have these kind of relationships established, there is going to be a framework in the mind that yes, we are going to take some advantage. Definitely it is going to be there. So you cannot say the related party relationships, something wrong, related party transaction, something wrong. No. The only requirement is that when there is a related party relationship and the related party transactions, these have to be properly disclosed, properly accounted as per the applicable financial reporting framework. Clear? If that is done correctly by the management, that is what the auditor will check. And if that is reported correctly, then we have no problem. There could be a true and fair view given if all the things are done correctly. Clear? So that is the basic backdrop. Now, accounting standards, that is basically financial reporting framework, is to be complied by whom? The management. So for the preparation of the financial statement is the management who is responsible. So obviously accounting standard 18 in days 108 is who they are going to comply. Correct? So they have to do the appropriate disclosure. They have to do the appropriate reporting. Everything they have to do it. What auditor will do? Auditor is required to just ensure that what the management has done, whether they have appropriately disclosed, appropriately accounted or not. That is the only requirement of the auditor. So this standard is going to talk about these transactions. If they are present in the organization, how will the auditor first identify the risk? And if the risk is identified, how is going to respond to the risk? That's it. Understand, RP transactions are one of the areas of significant risk. That means risk of high level of material misstatement, correct? Because of which the procedures that we are going to adopt are going to be stringent, or it could be extensive. The audit procedures that we are going to adopt here are going to be more. Because sometimes what happens is RP, though they are very risky also, they are also fraud risk indicators. Because understand, with relatives, okay, there is going to be a kind of manipulation easy. Because you tell them you hide this for us, we will hide this for you. Correct? So there could be a mutual understanding for respective auditors to be not getting the information accurately. So because of that, there is a possibility that there could be manipulation done by the management. So this is one of the areas which are considered to be extremely risky. And therefore, the audit procedure here also would be quite extensive to be applied to understand whether if there is any risk factor detected by the auditor, whether really it is a misstatement, whether there is an error or there is a fraud. So based on that, we are going to decide our opinion. Clear? So that is a simple backdrop. Now let us get on with the standard, understand line by line. Which points I make you highlight, see that you focus only on that. That is the most important part that we have to refer from the standard. All right. So let us get started. First is the scope of the standard. The standard deals with auditors' responsibility related to related party relationship and transactions when performing the audit of financial statement. So I told you two things are covered here. One is related party relationship and the other is related party transactions. Okay, then specifically it expands on how SA 315, that is identifying and assessing the risk of material misstatement. So why do you understand the RP transactions and relations? To identify the risk of material misstatement. Once you identify the risk, you have to respond to the assessed risk, SA 330. And finally, I told you RP is somewhere an indicator of fraud. So there could be a possibility of application of SA 240, responsibility of the auditor with respect to fraud. Correct? Then. Now, nature of RP relationships and transactions. RP transactions are very normal in the routine course of business. Otherwise, why would we have the related party relations created also in the first place? If you don't think that you have any benefit out of the particular party, why related party? Correct? So obviously, when the management is deciding to take some kind of major stake in a business, trying to, having a controlling power in some other businesses, there is going to be an intention behind it. Correct? That they want to take a benefit out of it. So these are very common that things happen. Very commonly the things happen. But auditor has to be very alert in this situation. He has to be maintaining highest level of professional skepticism here. Because alertness is most important. Because these relationships or transactions could be an indicator that there has been a manipulation. There could be some kind of fraud involved. And the best and easy way to commit fraud is to join hands with the related parties. Because they'll also cover up for you. Correct? Then, what they say is, the nature of RP relationship and transactions may, in some circumstances, give rise to high risk of material misstatement of the financial statement that then transactions with unrelated parties, obviously. Somebody known can be a collusion. Somebody unknown will not help you. So where is going to be high risk of material misstatement with the related parties? Correct? Then, RP transactions may not be conducted under normal market terms and conditions. Obviously, right? If you're a related party, there is not going to be an arm's length price every time. Okay, like very simple example, if suppose I'm running a coaching academy and if my own sister comes and takes admission, do you think I'm going to charge her at the same rate as charge the outside students that I have? No. So obviously they're not going to be at the regular terms and conditions. Okay, so scrutinizing of that becomes very, very important for the auditor because there is going to be risk of material misstatement involved. All right. So they have also given you an example here. They say that the related party transactions may be conducted with no exchange of consideration. Absolutely. Correct? Then, here what the auditor should do is plan and perform the audit with professional skepticism is therefore particularly important in this context, given the potential for undisclosed related party relationships and transactions. Okay, now understand, as I told you, preparation of financial statement becomes the duty of the management. So disclosing, accounting, all of that is the duty of whom? Management. Because AS 18 is what is applicable to the management. They have to comply with it. So you have to be very alert here to see that is there anything which is undisclosed by them? Is there a possibility that something undisclosure is there? Something unaccounted regarding related parties? That is going to be a risk of material misstatement. Correct? Then, what is the objective of the standard? Whether financial reporting framework established related party requirements or not, the auditor has to obtain understanding of the RP relationships and the transactions, so that he'll be able to understand if there is any fraud risk factors, correct? And also to conclude whether financial statement insofar are affected by the relations and the transactions, achieve a true and fair view, that is for fair presentation framework, or are not misleading in case of compliance framework, correct? In addition, whether applicable financial reporting framework establishes related party requirement to obtain sufficient appropriate audit evidence about whether RP relationships and transactions have been properly identified, accounted, and disclosed in the financial statements. Now, what is all this? Understand financial reporting framework as an AS18. AS18, by the very content of AS18, has a definition of what is a related party. So when AS18 is telling that these are all the parties considered to be related party, then you have to understand that if this particular entity is having those parties, they have to be identified, they have to be disclosed, and if there are transactions with them, you have to account for it correctly. But suppose if the financial reporting framework is silent regarding RP, that is, there is no, nothing is given about who will be considered as RP. Okay. In that case, also the auditor has to obtain sufficient appropriate evidence to understand is there any party which could be connected as what? Related party. So you have to identify it, disclose it, and account for it correctly. So understand two things. First, related party relationship. Second, related party transaction. When you talk about relationship, you have to look at the financial reporting framework. Does the financial reporting framework mention something about it? If no, you see whether there is any relationship which is an indicator of RP. Okay, I'll do the definition now, you'll follow it. Here you have to check whether all the RP transactions, all the RP relationships have been properly identified. Identified means told. Second, disclosed, also accounted. So disclosure comes for relationships, accounted come for transactions. Correct? So all of these things should happen. In case of fair presentation framework, you're required to achieve a true and fair view. In case of compliance framework, so that the accounts are not misleading. Correct? And if suppose the FRF, that is AS18, is already giving you who will be considered to be RP, then you have to obtain sufficient appropriate evidence that all those who qualify to become the RPs there, they have been properly identified, they have been properly disclosed, and they have been accounted for. Clear? Then, when you look at the definitions, they talk about arm's length price. Arm's length price is quite simple. It simply says, if suppose you and I are not known to each other, in what value we are going to exchange a particular transaction in the marketplace, that will be considered to be what? A arm's length price. All right. Now, if I'm not related to you, you are not related to me, the monetary consideration that we will be exchanging will be considered to be an arm's length price, a fair market value we could call it. Okay. Suppose it's going to be a related party, obviously arm's length price, definitely a big problem. But suppose if you're unrelated buyer, unrelated seller, then the price at which the commodity will get exchanged in the marketplace, that is considered to be an arm's length price. Ideally, we have to ensure RP transactions also happen at ALP, that is arm's length price. Okay, then. Now they have given you the meaning of the word related party, which I was telling you now regarding FRF. If suppose the FRF mentions who a related party is, that is going to be the related party. If suppose FRF is silent, then these 3 pointers will help you understand who could be the related parties in the given scenario. Okay, first, where applicable FRF establishes minimal or no related party requirement, then a person or other entity that has control or significant influence, directly or indirectly, through one or more intermediaries over the reporting entity. That means if I am the reporting entity, there is somebody else here who is either exercising control over me or they're exercising significant influence. That means I am either their subsidiary or I am their associate and they are a parent company. So that parent company becomes my related party. Got it? See, control is making me a subsidiary. Influence, significant influence makes me an associate and you remain the parent. So if this kind of relationship is existing, that parent company becomes what? A related party to me. Second, another entity over which the reporting entity has a control. So I'm the reporting entity. Who is the reporting entity? Whose audit has been conducted. So I'm the reporting entity and I am exercising control or I am exercising significant influence on the other entity. Then I am the parent company and they are either my subsidiary or associate, correct? So in that case, those subsidiary and associate of mine also become my related parties, correct? Finally, if that also does not fulfill, another entity that is under common control with the reporting entity to having common controlling ownership. That means, suppose there are two companies, A and B, okay? And there is a company C, which is controlling jointly both A and B. So A and B also become what? Related to each other. It's a chain relationship. So when there is a common company, like C is controlling A as well as B, A and B also become what? Related parties. Correct? Then owners who are close family members, okay, they say entity, another entity that is under common control with the reporting entity. Okay, through having owners who are close family members. So two entities. I am in one of the entity. My father is in another entity. So we are close family members. These two also become what? Related party. Correct? Common key management. The BOD is common. Correct? They also will become your related parties. Very interesting part they have told you here. Now government, okay, central government, state government, they are going to own so many entities in the in the country. There are so many state government, central government undertakings which are there. Now all of these are being held jointly by either central government or state government or jointly by both of them. Now tell me, there are so many. So we say common control by the entity. That means state government is common. Okay, maybe they are controlling together some 25 entities. So can we say this 25 are what is it, related parties? No. So they are very clearly excluding, and they're telling that where government is controlling, where the common control is of the government, then those entities will not become RP. Otherwise, imagine if that is considered to be RP, no, your audit will never get over. Because there will be so many related parties to check that the end will never be there. Because government, if you're going to look in this C pointer, they are saying common control. That means that particular entity should have a common control. That means you should be controlling this also, that also, that also. So central and state government are going to control so many in common. So can you consider all the entities to be related parties? No. If that is done, no, then over. Audit will never get over because so many RPs in the case of government entities. You cannot do the audit. It will never get over. Correct? So they're very clearly excluded that common control we are not going to consider as a part of government entities. Okay. However, entities that are under common control by the state, that is, it could be national, regional, or local government, are not considered related unless they engage in significant transaction or share resources to a significant extent with one another. Okay, like if you tell two entities, both are controlled by central government. So both of this, because they are controlled by central government, they have no RP relationship. We cannot call them to be related parties. But suppose they are exchanging resources. Maybe they have common employees, maybe they're transferring labor, there is raw material, there is finance being exchanged. So if there is some kind of relationship going on between them, only then if there is an exchange, we will consider them to be RP. Otherwise, only because they're controlled by the government, you cannot call them to be RP. Correct? So there has to be control, agreed, but control alone will not make it RP. Along with that, there has to be a sharing of resource, which is significant. If that is happening, okay, then we consider both the elements and make you RP. Otherwise, only common control in the public sector will not be considered to be what? A RP relationship. Clear? This pointer becomes very clear, important because we should understand it. Because if government, if we take into consideration, no, then government is holding so many entities. And if that is considered to be a criteria for understanding RP, then all of these entities will become what? Related party. So are you going to identify all of them, disclose all of them, check if there are going to be accounting of these transactions? Not possible. Given the time and limitation, I mean, it's not possible only. And it is actually not, actually correct. It's not even correct. So we cannot expect something to be like that. Okay, then. Moving on to the main part of the standard, that is risk assessment procedure and the related activities. So first we need to identify the risk which is connected with the RP. Okay, now you just imagine you go to the audit of a particular client. So you need to know that who are the related party relationships and what are the kind of transactions that you have had. Correct? With whom are you going to sit and discuss all this? Obviously, you all must have actually thought it correct. So it is going to be the management. Correct? So first thing what you will be doing as a part of your risk assessment procedure, that means whether risk is there or not there, you have to obtain the understanding of what? The related party relationship and the transactions. And to obtain the understanding of this, you have to sit across the table with whom? The management. You need to question them, no? Who are the related parties? What are the, what is the kind of relationship that you have? Did you have any transactions with them, etc., etc.? Don't you think? This understanding of yours will help you develop whether there is a risk or there is no risk. Correct? So here, understanding the entities, RP relationship and transactions. The auditor shall inquire of the management regarding the identity of the entities RP, including changes from the prior period. That means who are the identity means what? Who are the related parties? Has there been a change from the prior period to the current year? Because if suppose recurring audit, then we already know the RPs of the last year. So are there any changes also? We need to know. Then the nature of relationship, holding subsidiary, holding associate, relative, who is it? Whether entity entered into any transaction with them. See, RP relationship is okay. but have you also entered into transactions with them? If yes, you give the details of the transactions. Then also you should ensure whether the management has proper controls in place with respect to related party. I told you it is high risk of material misstatement area. So here you need to very clearly understand whether controls are in place or not. So the auditor will ensure, identify, that means you have to check whether controls are in place for identification, accounting for, and disclosing of related party relationship and transaction in accordance with the applicable financial reporting framework. Then authorize and approve significant transactions and arrangement with the related parties. That means RPs, whenever they are there, you should have an approval done by the senior most members. So whenever there is going to be a transaction with the RPs, see that it has been approved by the proper personas in the organization. Control should be strong there. Not anybody in the organization can enter into transactions with the RPs. You should get a proper authorization. Like basically in the companies, when you talk, audit committee actually has to give you an approval. Correct? Similarly, authorize and approve significant transactions and arrangements outside the normal course of business. Very interesting part. See, if something which is happening in the routine, like for example, if you're a manufacturer, if you're taking raw materials from your RPs, no problem. It is something which is regular. It is normal course of activity. But it is something that you're doing outside the scope. That means that is not your routine activity only. Okay, you are supplying some commodity, but there is a financing activity done with the RP. So your business is manufacturing. How can you do something financing activity? And you have, given extended finance to the RP transaction, RP relations. So here, don't you think what you have entered into with them is something outside the scope of your normal business? So in that case, don't you think you as the auditor are going to ensure that you will properly check that these transactions are, what is the reason for the transaction? Is this a fraud? Is there a manipulation? Don't you think you'll be doing it? Yes, because your business activity is manufacturing. Okay. So if you take raw material from them and do it, no problem. But why are you extending financing to them? You're giving money to them. So don't you think you as the auditor will be interested in understanding what is this kind of business relationship or the transaction that they've entered? What is the reason for this kind of loan? What is the rationale behind it? What is there a manipulation happening? Is this kind of siphoning of funds? Don't you think you'll be having that in mind? Yes, correct. So here you'll be doing that thing. Okay. So first you have to understand the entity. Where you're going to do with inquiry with whom? With whom? It is going to be with the management. Sit across the table with the management. Talk to him first. Management, did you identify all RP? Is there any change with regard to the last year? Second, what is the kind of relationship that you have with the RPs? Okay. Third, during the year, did you enter into any transactions with the related parties? Correct? Then, also ensure that you're doing risk assessment. And we know risk is going to be only when controls are also bad. Because if controls are good, risk will be down. So you are doing risk assessment. So along with the understanding, you also have to understand about what? Control environment. So you have to check whether controls are properly in place or not. That means whether you have proper controls to check whether accounting of the related parties things have been done as per the applicable financial reporting framework. Then whether these transactions have been properly authorized and approved. And also those transactions which are outside the normal course of the business, something which is not routine, whether proper approval, proper authorization is there for that or not. Correct? Then maintaining alertness for RP information when reviewing records or documents. See, whenever you are going to go through all the documents, like there could be loan documents, there could be sale, purchase, everything, you have to be very alert to check whether any of these transactions have been entered with RP. Sometimes what happens, management itself does not know that a particular entity is related party. Obviously, it's possible. The management are not going to be some expert people in all the fields. So there could be some times that they don't understand the financial reporting framework that well, and they fail to recognize a particular party, which is a related party, and they don't know that it is a related party. Correct? So maybe they were not aware that this particular relative is considered to be an RP as per the financial reporting framework. So genuinely, it's an error by them. So you, when you're going to inspect, you have to be very alert to ensure whether there is any RP which has been, ignored by the management or maybe overlooked by the management, because of which it has not been disclosed, which has not been identified, which has not been accounted. So you have to be very, very alert to understand if there is any incident like that. It could be error. Sometimes management will overlook. Sometimes the management actually doesn't know that party is a relative. Very simple. Yeah. When you go to marriages and all. Okay, let us take a normal example. A very simple example would be that when you go for weddings and all, you see that there are so many relatives which you do not know. Okay, so that time they'll say he's your relative, he's your relative. Okay, so obviously at that point in time, you actually realize that, yeah, that person is my relative. Until then, you are not even aware that you had a relative like that. Correct? So very normal in business also, it is the same thing. There could be a possibility genuinely the management is not aware that the party with whom they're dealing could be a related party as per the definition. So they must not have identified it, not must have disclosed it, okay, or maybe they have not accounted the transaction which they have entered. Correct? So here understand, during the audit, the auditor shall remain alert when inspecting records or documents for the arrangements or other information that may indicate the existence of a RP relationship or transaction that management has not previously disclosed, okay, or identified to the auditor. That means they have not told the auditor. So in the first risk assessment procedure, what we are doing, we are communicating, inquiring with whom? The management. So obviously management has told us everything that time. But now you also have to be careful that only don't rely on the management. After management tells also you want to inspect certain documents, because there could be a possibility that some of the information is still hidden, maybe intentionally or unintentionally from you, and that you will understand by reviewing the documents only. Correct? Then, if the auditor identifies significant transaction outside the normal course of business, the auditor shall inquire with the management about the nature of the transaction, obviously, and whether RP could be involved. So if suppose in my example, I told you that you are a manufacturer and you are doing some financing activity, then you'll understand, yeah, financing activity is something outside the scope. So you will ask the management, why did this activity happen? And basically, is RP involved here? Because if RP is involved here, no, highest scope of material misstatement. Correct? Then, sharing related party information with the engagement team. Obviously, anytime you identify a risk connected to the related parties, any information that you've identified, you have to immediately inform your engagement team members, because then they also will become alert during the course of the audit. So then whenever, whichever area they are checking, they'll also become double sure. They will also cross-check if there is any RP which has not been identified or disclosed in the financial statements. Correct? Then, now what will you do? Identification and assessment of the risk of material misstatement with respect to related party relationships and transactions. So once you perform the risk assessment procedures, you'll be able to identify and assess the risk. So here, if you believe that, yeah, risk is identified, but sometimes you believe that these risks are intentional, then you should see the applicability of SA 240 also. Because if they are indicators of fraud risk factors, then you have to ensure there is a proper applicability of SA 240 also in place. Okay? Then, moving on to the next one, responses to the risk of material misstatement associated with related party relationship and transactions. That means identification of previously unidentified or undisclosed related party or related party relationships and transactions. I'll tell you what it means. In the first thing, when you said, when you were sitting across the table with the management, the RP discussion that you were having with them, you first question them, tell us all the RP relationships, tell us all the transactions, what is the nature, did you enter into transaction, etc., etc. Now what happened was, when you were checking the loans and documents and all, you came across another related party, which in that original discussion, management didn't tell you only. Now tell me, don't you think this is some kind of indicator that something is wrong? Correct? So now suppose during your audit risk assessment procedures, you have come across any particular relationship which happens to be a related party, or you come across a transaction which was not disclosed to you by the management. Then in that case, how will the auditor react to this? Okay, now see here. If the auditor identifies RP or significant RP transactions that management has not previously identified or disclosed, that management has not told, correct? The auditor shall first promptly communicate with the other engagement team members. That means you have to first become alert. Look, this is what it is. You all have to be alert that there are some information which have not been disclosed to us 100%. Then, where applicable, financial reporting framework establishes RP requirements, request management to identify all of them. That means now tell the management, look, now you have to identify all of them, because we have identified some which are undisclosed by you. So now take necessary steps for you disclosing all of them. Ask the management, you said you have controls, right? Why did your controls fail? When we had an original discussion with you, the initial discussion about the RP relationships and transactions, when we asked you about the controls, you told you have proper controls in place. Why did your control fail? And why could your control not identify or disclose the related party relationships on time? Correct? Then, obviously, now you have identified something which is undisclosed. Are you going to leave it just like that? No. You have to perform substantive audit procedures, do the testing of it in detail to check whether any risk is involved. Correct? Then, reconsider the risk that any other related party transactions have been omitted, or they're intentionally doing it, because this could be an indicator to fraud risk factors. Then, if suppose there is a non-disclosure by the management which appears to be intentional, evaluate the implication on the audit. Because if it is intentional, it is fraud, and that is going to impact the audit report. correct? So what will happen if suppose while you were doing the audit, you came across certain transactions or relationships which was not told to you by the management on the first hand. Now you came across this. Now what you will do is, first you will promptly communicate with your engagement team members, make them alert, then sit with the management again and ask them, look, this is the requirement. You see whether such kind of relationship, is there any other which you're trying to hide? Second, why did your controls fail? You told you had controls. Why did they fail? Not only that, you have to apply substantive audit procedures to ensure that they have correctly accounted and disclosed. Then see whether there is a risk that any other related party transactions also could be there which have been undisclosed. And also see that whether this non-disclosure is appearing to be intentional. If intentional, fraud, and that is the reason, you have to check the same implication on the audit report. Correct? Then next one, identify significant related party transaction outside the entity's normal course of business. So suppose I'm a director of the organization and I have a brother, and the business that I am into is the manufacturing, as I told you. Now, suppose if my brother is in the business of producing the raw material or supplying the raw material, that is something acceptable. Okay, I'm taking the raw material for him for the purpose of my manufacturing process. But here I am involving in financing my brother's business, or maybe I'm giving a loan, a hand loan to my brother. Tell me here, this kind of activity which I'm doing, is it something which is normal course of my activity? No. So don't you think this is going to be something which is completely, different, something which is significant and outside the normal course? And if when this related party is involved, if suppose my brother, that the related party is involved, don't you think the auditor has to ensure what is the reason behind this kind of transaction? Is there a manipulation? Is there a fraud? And we know two types of frauds: misappropriation of assets, fraudulent financial reporting. So you have to ensure whether is it an indicator of these kind of frauds being committed. Okay, so auditor has to be very alert when he sees something which is outside the scope of the regular business. And if it's outside the scope, you have to become double sure. Correct? So when your auditor comes to across a situation where things are outside the scope of the normal business activity, then you have to inspect the underlying contract. So the transaction which we have entered with my brother, right? So you'll be having an agreement. So inspect the agreement properly. Understand the reason behind giving it as a business rationale, because this could be possibility of fraudulent financial reporting or misappropriation of asset. The terms of transactions are consistent with the management explanation. Okay, management is telling we have given loan for this purpose, or we have charged this rate of interest, or we are giving this installment repayment schedule to them and all that. Whether that and reality is really matching or not. Then transactions have been appropriately accounted for and disclosed. See, if italic 3 is not there, it's fraud. Understand clearly. Because whatever you do it, but you have to account and disclose for it correctly. If italic 3 is genuinely missing, no, it will definitely affect the opinion of the auditor. Correct? Then obtain audit evidence that the transactions have been appropriately authorized and approved. Keep that as a thumb rule or maybe a bottom line for every RP relationships and transactions. Authorization is a must. No entity can enter into RP transactions without a proper approval coming from the appropriate authority. Approval is required. Correct? Then when management has made an assertion in the financial statement to the effect that RP transaction was conducted on terms equivalent to prevailing in the arm's length price, auditor shall obtain sufficient appropriate evidence about the assertion. That means they're telling valuation or the measurement of the related parties. If the management says we have done at ALP, don't trust the management as it is. You have to actually ensure whether the transaction has really happened at arm's length price. So in the financial statement, the assertion made by the management is what? RP transactions have been done at ALP. Don't just trust on their words. Don't only, try to believe what they're saying. Okay, you already an experience. Just now we said that they discussed with you and they told you about who are the related parties and everything. But later when you were inspecting, you came across something which was undisclosed by them. Correct? So you just cannot rely on what they're talking. You also have to apply the procedures. So here also, if they tell ALP, don't just believe them. You check whether really the transactions have happened at ALP or not. Okay, then. Evaluation of accounting for disclosure and all. Here we are going to check whether three things very important: identify the related party relationships, disclose the related party relationships, and accounted the related party transactions correctly. These three things are there, then we have no problem with the RPs. Correct? Then written representation, as I always tell, when the auditor is doing something as a check of something which the management is responsible for, always you have to obtain written representation. So here, disclosure, identifying and accounting of the RP relationships and the transaction is the responsibility of the management. And about this, whether they are properly disclosed to the auditor or not, disclosed in the financial statements or not, accounted correctly or not, is their responsibility. So always remember to obtain what? A written representation. What written representation? First, that whatever RP relationships they were aware of, they have disclosed to you correctly. That means to the auditor, they have not hidden anything of what they are aware of. Second, they have appropriately disclosed, identified and accounted for as per the applicable financial reporting framework. Correct? So that is what you will be obtaining a management representation letter, understand of which they are aware. That means I told you there could be a genuine possibility that the management sometimes really does not know that there is an RP. So there could be an error. So we request them to give an MRL for all the RPs which they were aware of. They have disclosed it to the auditor and they have accounted also for it correctly in the books of accounts. Correct? Then, if you identify any significant risk, you have to obviously communicate with whom? Those charged with governance, and that we have studied as per SC 260. We have always told the same thing. Documentation is quite simple to understand. Clear? So this is basically the idea of SC 240. Okay, I would recommend that for the examination, risk assessment procedures, you do it properly, and also the indication of where unidentified or undisclosed related party relationships and transactions are identified. So I'll give you a quick preview, means the summarized way of understanding it so that it's very, very clear. First, RP relationships you need to identify. Okay, that means you have to understand what is RP. The financial reporting framework basically gives you what an RP is. Okay, so related party relationships are basically defined by the financial reporting framework. But if the financial reporting framework is silent about it, then there are certain criteria given for you to understand who could be the RP for their entity. Here, you would see the relationship of the holding subsidiary associates. Also, you would see the common control, common ownership. There could be close family members who are controlling commonly, and there could also be a possibility that the management is common. So these things you will take into mind and decide whether a particular entity is a related party or not. Here, very clearly, you're going to exclude the government common control because there are going to be multiple government undertakings. So you will consider them to be RPs only and only if there is going to be a relationship through exchange of some kind of resources, finances, something like that. Then only we are going to consider them to be RPs, otherwise no. Okay. Third point, be very clear, because common control, if it is there, then that particular entity will be considered to be what? A related party. Okay. Then management will be responsible for the preparation of the financial statement. So they only will be required to disclose, okay, about the related party relationships, and the transactions have to be accounted for. So you, the auditor, are only responsible to check whether what the management has done, whether they have done it appropriately or not. Here, though it is something very normal to have a RP relationship and transaction, this year the auditor will be very alert because the risk of material misstatement will be very high, because of which you have to be professionally skeptical throughout the audit. You have to be really alert when you're checking these transactions, because these could be an indicator of fraud risk factors, because the terms and conditions of these transactions will not be something which is very normal. There could be something which is different, and because of which there could be indicators of fraud. Correct? You have to ensure that financial reporting framework applicability is done correctly. So all the related party relationships, all the transactions have been identified, disclosed, and accounted for correctly. Correct? Then, first you have to do the 315 checking, that is identify and assess the risk of material misstatement. So here you need to understand the entity, related party relationships and transactions. And the people who are going to help you with this is going to be the management. So you'll be inquiring with the management about the identity of all their relationships and the transactions. So you'll ask them the nature of the relationships, what kind of transactions you entered with them. Okay, also ask them for the controls, because risk assessment you're doing. So risk of material misstatement is the combination of inherent and control. So you also have to understand the controls. So you ask them whether controls are in place for appropriately, disclosing them as per the applicable FRF, whether there's a proper authorization, approval for all the RPs. And if there are significant transactions outside the course of the business, then that also should be approved and authorized properly. Then there's a possibility that sometimes management themselves will not be aware of related party relationships. So they will not have disclosed it to the auditor, identified to the auditor in the initial conversation. So this, by inspecting certain documents and all, the auditor could understand. So he will then check whether these have been correctly accounted for or not. Also, whenever you come across any information like that, you have to immediately inform it to all your engagement team members, because that becomes a very important part of the planning process of your or further planning that you have. Whenever you find out a related party relationship, check for the fraud risk indicators. If they are there, you will apply SA 240 as well. Suppose in the initial discussion with the management, whatever they have identified and disclosed to you, there are some elements which you have not told, and this the auditor has encountered during the course of his audit. Then here the auditor has to perform procedures like he has to inquire with the management that is there, why did your controls fail? Or maybe what was the reason that, your though controls were in place, they could not detect all the related party relationships. Request the management to see if there are any such similar, transactions again, which have not been disclosed earlier. Also, you have to communicate immediately to engagement team members and make them double sure or make them alert. Once you identify something, you have to perform the substantive audit procedures over them. You have to reconsider the risk that is there any other information like that undisclosed. Also check whether it is intentional hidden from you, because there could be fraud risk indicators. Then when there is going to be something which is outside the scope of your regular business, you have to ensure that what is the rationale behind this kind of transaction. Is there a fraud involved? There is fraudulent financial reporting or misappropriation of asset. Then see whether terms, what they are there in the transaction and what the management is explaining it to you are consistent or not. Then you will see that whether these transactions, though they are outside the normal course, whether they are properly accounted for and disclosed in the financial reporting framework. You need to obtain sufficient appropriate audit evidences regarding the proper authorization and the approval of these transactions. Correct? If the management is giving an assertion that they have recorded as per ALP, you obtain evidences whether really transactions have happened at arm's length price or not. You have to ensure that the written representation has been really obtained from you by you, that they have disclosed everything that they are aware of, and these what they are disclosing to you have been properly identified, disclosed, and accounted as per the applicable financial reporting framework. And then if you find out these to be a significant risk, you have to communicate them with TCWG. Okay. After I finish the standard, I would recommend all of you to just go through the chart which is given there at the back. This will enable you to get the proper understanding. Okay, as I told you for the exam point, be very clear with your understanding about the definition of related party and the risk assessment procedure and the related activities. That part becomes very, very important. All right. So that be very particular in the exam point of view, and very, very important. The standard is, see that you actually do it very well. If there is a doubt, please immediately ping me back after you listen to the standard. You could either mail it to me or you could send it through sir to me, so that I address it immediately. Don't keep any doubt pending. Okay. Yes.